right, so thanks for joining me today. Today I'm going to talk about trading the 30-year Treasury bond. And I thought and I appreciate you taking the time to come out and hang with me. So I thought I'd show you a trade in this presentation that you can actually take home, play around, and have some fun with, and actually make some money with. Because why are you really here? Well, you want to make more money for your family and for yourself, right? My gosh, an extra $100 a day for some people is absolutely amazing and makes a change in people's lives. And that's just the start of things to come with what we're going to show you. So today I'm going to discuss the 30-year Treasury bond. I'm going to show you a trade. And I want to kind of dismiss some of the fears also that people have about trading bonds, because it's like anything else. If you don't know enough about it, then you're going to be afraid of it. And of course, I want to put up there that there is risk in trading. Ooh, imagine that. And also, if you were to open up a restaurant, you know how many restaurants actually make it? Only 10%. So in most businesses, if you were to start a business, 80 to 90% of businesses fail. It's just like anything else. So why do they treat it any different? Probably because of all the lawsuits and all the litigation that's happened in the past where people have lost money, and they make you put up all these disclaimers. So I'm going to let you read the disclaimer, and you probably all have seen this 1,000 times. So the big question is, well, what are the 30-year bonds? Well, let me just give you the matrix on this whole thing. So I trade the 30-year Treasury bond. It's called the ZB. It's the 30-year Treasury bond future, and these futures expire every March, June, September, December. So here's just kind of the basics. Now, what are my top 10 reasons to day trade bonds? Well, number one, the margins are only $500. So it really doesn't take a whole lot of money to get involved. Now, if you trade the CL, which is oil, that's $1,000, depending on who your broker is. So again, this $500 margin also depends upon who your broker is. Some brokers are more. If you trade gold, you know that's $1,000 minimum. So it's pretty highly leveraged. And every tick, and I'll get into what ticks are in a minute, but every increment is $31.25, which is a little bit more than 3 times that of oil, gold. I mean, it's very, very powerful in the increments. And I hear people say that TradeStation costs more and Thinkorswim costs more. Yeah, it depends on who your broker is. And I actually just put together a whole new presentation on brokers and how to choose and what to look for. Look for that from us down the road to hand that out to people, because that's a very powerful thing that may help a lot of people. So one tick is $31.25. What a payday. Just think if you got 2 or 3 ticks a day, what that do to change your life. 3 is there's plenty of volume and there's plenty of volatility during the trading day. Bonds can move. Now, they move a little slower, but when you think of the magnified move compared to oil, compared to the S&P, it's absolutely amazing. I mean, the S&P, one tick is $12.50. This is almost 3 times that type of move. And the chart is not as sporadic as oil and gold. See, here's the problems that can happen with gold and oil. And again, I love trading oil and gold, don't get me wrong, but every once in a while, actually, some days, somebody says, oh, you know what, I think I'm going to buy 5,000 contracts of oil. Bam, and they put their order in. And guess what? Everyone gets sprayed. You can have the best setups in the world. You can have all the stars aligned. You can have your, MACD stochastics cross, and you can have your magic 8-ball shaking and say go long or short. And I don't care what you're in, but when you get sprayed by oil because someone says, oh, I'm going to go 7,000 contracts, it knocks you out. And that's one of the issues that we have with oil is sometimes people just lay big orders on and move it 50, 80 cents and just blast everybody. When I take a breakout trade on bonds, it's much better. Bonds, in my opinion, when I actually look at the order flow, when I look at the way it moves, how volume moves, it's much more orderly, it's much more systematic, and it's much more normal than other things that I've traded. And that's kind of what I like about it. It just, it doesn't play around with you as much, if you know what I mean. And it ends up being fantastic trading around news events. And that's going to be what trade I'm going to show you in a little bit. Even if there isn't news, I'll show you how to make money on it. And it's a reliable leading indicator because there is an interrelationship between how bonds move, how, let's say, the DX moves, how gold moves with oil, and it is all interrelated to how the S&P moves. So they're all connected, and they all play a little game called follow the leader. And there are fewer games played by the market makers because the market makers with bonds, in my opinion, tend not to have the type of weight and the gamesmanship that other things that you play. And you know, I don't day trade stocks anymore just because the market makers and the computers are really toying with you much to a greater degree when you're trading Amazon or you're trading Dell or you're trading one of the bigger companies. So when the market makers aren't as big of a player, it's kind of more of an even keel game because you're trading against institutions, you're trading with people who are systematically buying, and they're doing it in a logical way. Number 9 is it's easier, in my opinion, to make $1,000 on one contract compared to oil. Now, I'm going to tell you, I love trading oil. There's a lot of benefits to trading oil. But think about this. If I were to make $1,000 on oil, how many ticks does that have to go? Well, it has to go 1,000 ticks, right? Well, on the ZB, on bonds, it has to go 31 ticks to make $1,000. So the funny thing is it goes 31 ticks more often than oil does 100. I'm sorry, 100. That's right, 100. 100 ticks. So oil has to go. I'll clear it up. Oil has to go 100 ticks, and bonds only has to go 31. So it's pretty powerful, and that's kind of the appealing thing to when you trade it. And it doesn't have to go far to make money. Do you know how many ticks my first target is on ZB? It's only 4. I'm going for 4 ticks on my first target. I mean, come on. Not that hard of a game to play. Okay, what's 4 ticks? That's roughly about $125 per contract. So, and also something to think about. And then finally, slippage and good fills. I am really impressed with the fills I get. I don't get slipped. When it comes to news can get there can be some slippage in news, but I'm really happy with the fills I get. It's, you know, I've been trading. You guys ever trade the S&P 500, the E-mini, I should say? I don't think a lot of you trade the big contract, but does anybody ever feel like when they trade the S&P that when they get filled, they're like the last person in line, and then they finally get filled? And it's like everybody, including everybody in your entire city, gets filled before you, and then you get filled. That's how I feel when I trade the S&P 500. And a lot of times I get into trades on the S&P, I have to front run it and get in one tick. I have to pay more, otherwise I don't get filled, because that's how accurate my fills are. The Russell 2000, same thing. Hey, I love trading the Russell 2000. That's a great thing to trade at the right time of day. But, you know, there's the top 10 reasons why I like trade bonds. It's just a great way to make money. So now you know the power. Now think about this. Think of this ratio. And let me see if I can put this on here for everybody. I'll write it up. Think about this. If I trade the ZB, it's going to cost me $500 in margin, and every tick I get $31.25. If I trade oil, I have to put up $1,000, and every tick is $10, right? If I trade the, let's say, the ES, which is the S&P 500, I have to put up $500. How much money do I make? I make $12.50. So, you know, it's the biggest. It's one of the biggest bangs for your buck. Look at the leverage you're trading. It's absolutely amazing. Okay, so now we got that out of the way. Why don't we dig into a trade that I'm going to show you guys that you can simply just take every morning, and it has a high percentage of wins. Now, keep in mind, I'm going to first start out with one thing. What's that? Risk to reward. Now, when we get into a trade on the ZB, our first target, actually, let me back up a minute. I believe that if you trade, and this, you know, this is true with anything, and I'm going to just go on a little tangent here because I think this is going to help a lot of people. It's safer if you're, I don't care if you're trading the ES, the TF, oil, gold, the Russell, or ZB, or ZN, what have you. But it is safer to trade two contracts than it is to trade one. And here's why that is, and it's all mathematics. It really is. Now, if you have an account size of 2,000, that's the only thing I'm going to say it's not safer, because here's what we do. When we trade anything, we always want to be trading two contracts. Why? Because when we trade ZB, our first target is going to be 4 ticks, which is how much money, ladies and gentlemen? Roughly $125, right? That's our first target. Now, our second target is going to be different. We're going to go from anywhere from 8 to 24 ticks, which can be anywhere from, you know, 500, or I should say 250, to, you know, up to $1,000 on that second contract, because our stop and our risk on the trade is going to be $250 for 2 contracts. Okay, this is 2 contracts. This is a 2-contract trade. Because when you trade 2 contracts, we get out at 4 ticks on the first, which is $125 profit. But on that second contract, it's all about the runner. And if you can hit the runner for 8, 12, 24 ticks, your risk-reward ratio changes dramatically, so that if your risk is 1, your reward has a 4 multiple. So we want to make 2, 3, 4 times the amount of money we're risking. So it's important that we do that, and that's how we teach it. So I'll just mention that to you guys as we start. Now let's get into the kind of trade I take. And what I like about ZB and I know I should probably be speaking in Eastern time zone, but yeah, exactly, John. So I'm going to use Central Standard Time Zone because the bonds trade in Chicago, and usually you go by whatever exchange that is ahead of it. But the bonds open up every morning at 7:20 a.m. Central Standard Time. And there's 2 things to be aware of. One is you have the open, and then 2, you've got news. If there is news that morning, we skip the open. If there isn't news, then we take the open. Okay? Does that make sense to everybody? Does that make sense? Okay, now let me explain to you what news is and what news isn't. Because let's take a look at news. Here's your calendar, okay? I'm on the NASDAQ website. And let me tell you what news is and what news isn't when it comes to trading bonds. Anything in red, you see this in red? See that in red? That's significant news. That's usually Thursday and a Friday. Okay? Some days there's news, but if there is news at 7:30 in the morning or 8:30 Eastern, that is when things are going to move, and that's when things are going to go fast. Now, every day is different, and you're going to have, and some days you just got to check the news. If you do not check news, you will regret it. I'll tell you that ahead of time. So step 1 on this whole thing, I hope you're taking notes, is check news. If there's news that day, then that's when we're going to take this trade. So there on Thursdays when you have jobless claims, retail sales, that's when this trade is going to occur. On Friday, you have PPI, and that is going to be your major movement on the bonds. If you have an FOMC day, it can be a little bit quiet. So keep in mind that's the first thing you check. So here's what we're going to do. And my screen's a little messed up, isn't it? How about that? All right, so what we're going to do now is I'm going to bring up what my chart looks like. Actually, let me back up in just a minute. So we have 2 events taking place. When bonds open, let's talk about the bond open. What we're going to do on the bond open is 5 to 10 minutes prior to the open, we want to create a range. Okay? And this is just the first 5 to 10 minutes. That's all I care about, is the 5 to 10 minute range prior to that open. Because what you'll tend to see bonds do is quiet down and just trade in a range like so prior to the open. So if I start over and make it, again, I'm trying to make this real simple for everyone. So here's the bond open, and here's what takes place. 5 to 10 minutes prior, you'll see price move around and just be kind of docile. Most of the time, you really will not see it trending. You won't see it moving in any particular direction. You'll see it just aimlessly kind of move up and down. And what we're going to do is we're going to mark the low and the high 5 to 10 minutes prior to the open of bonds. And then this vertical line that I'm going to draw right now, that represents, and I'm going to do this in Central Standard Time Zone, 7:19 a.m. Central Standard Time. That's what this red line represents. Okay? What we're going to do then is simply we're going to bracket and put an order in to buy one tick above the range and one tick below. So we'll have a buy order here and we'll have a sell order here. Now let me tell you, and I'm going to give you a little bit of an edge to this trade, because here's how I trade it, and I'm going to bring up an example for you. Now, the interesting thing is, if this thing breaks out to the upside or to the downside, yes, I am using a 1 minute chart. This is a 1 minute chart. The interesting thing is, these are buy stop orders and sell stop orders. The interesting thing is I also have a chart on the right, I'm going to cut my screen in half, of the ZN on the right, and I have a chart of the ZB on my left. John, what in the heck is the ZN? Well, the ZN is the 10-year Treasury. So this is the 10-year Treasury. Whoop. This is the 10-year Treasury. And on the left, we've got the 30-year. Well, the funny and interesting relationship is that generally, and I'm not talking 100%, and sometimes some markets might be a little different, but a lot of the time, guess what happens? If you watch the ZN, it will break first, and it'll start moving. And it will give you anywhere from a 5-second to a 15-second head start on what's going to happen with ZB. How cool is that? So you're watching this thing, right? And you're watching your right-hand chart, and all of a sudden, ZN just starts creeping up, and bam, takes off. And then guess what happens after that? 30-year bonds, boom, up. There it goes. Bang, zoom, off to the moon, Alice, right? So it's a pretty cool relationship that generally happens. It doesn't happen 100% of the time, but it's something to watch for. Because if you can get any edge whatsoever on the market that's legal, I'm all for it. Okay? We want legal, ethical ways of making money, because at the end of the day, you don't have to look back and have to wonder if something happened. So that's what I look for. So here's how that looks. So on the right-hand side, I've got my ZB chart, or ZN, and on the left-hand side, I've got my ZB chart. Now let's look at this. Okay, and this will be kind of fun. let's zoom out a little bit. And not a lot of movement on that one today, but look at this. So here's what I'm looking for. Okay, does everyone see this blue line? So here's what I do. Now look, step one, we got the ZB, and it's a 1-minute chart. On the ZN, there's my problem. Oh, you know what? I have the wrong one up there. Hold on 1 second. I have the wrong month on that. I just need to change that real quick. Here it is. Looks like I got everyone's attention today. This is kind of interesting stuff, isn't it? Yeah, I think it is. I think it's some pretty cool stuff, actually. So let's change this to 7:15 or 9:15. There it is. That's a little better. Oh, muy bien. Much better, much better. So here's what we got taking place. Let's start over again and kind of just break it down. I know I've got a lot of people in the room today, and I've got a whole plethora of students from, hey, this is all new to me, to people who've been with me for a long time and saying, oh, that's pretty cool. I never noticed that. I like it. So, hey, John, I appreciate your comments. Good to have you here today. So here's what we're doing. And I'm going to blow this up and be real in your face. Is that okay? I'm one of those guys who I try to be very specific. Do you ever learn from a trader and it's like, well, you know, I kind of feel the market and it just feels right. Well, how do you convey feeling? Be as objective as possible and break down what your thoughts are step by step so I can understand what it is. So that's kind of what I do. So let's count these bars. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So you see these are 10 bars prior. Real easy, right? You can count that out. So I count those bars out, and I actually have software that automates all this for me. But if I just take the range before 5 to 10 minutes prior, now why do I say 5 to 10 minutes prior? Ladies and gentlemen, it's not always 4 minutes, it's not always 7 minutes, but it's generally between 5 and 10 minutes because it's a little different than other things I've done. But look at this. So I've got the range 5 to 10 minutes prior, and I'll place my long one tick above, which is right here, which is actually at 149.25. I'm going to place a long order. It's a buy, stop, limit order. First target, 4 ticks. Second target will be anywhere from 8 to 24 ticks. Okay? I'm always trading 2 contracts. Why am I always trading 2 contracts? Because of the multiple that I want to get on the second. Okay? I want to get a multiple. I want to make 4, 8, 20, 31 ticks on that last contract. Okay? It makes it so you can have $1,000 a day trading 2 contracts. Not bad. So to answer your question, I don't pick direction. I let the market pick it for me. There's my long. Right down here is my short. Below the low. And guess what I do then? I let the market decide which way it's going to go. It's either going to go down or it's either going to take off. Now, there is some things that I will be teaching in a 3-hour seminar that I can pretty much tell which way it's going to go, because I've not added into this equation so far, and I'm not going to get into it tonight because there's much more going on than what I think is going on. But I am a big fan of OFA, which you've seen on the right, and OFA will actually tell me which way it's going to go. I know with a very hard certainty which way it's going to go. But for tonight, let's just keep that simple, and let's just back up and say, let's just bracket it and take a long or short and let the market decide. So I'm not going to get into OFA tonight at all, because that's I could be here for the 3 hours, 4 hours, like I said. But what I want to give to you is a more simplistic method of trading this so that you can go on your own and make some money. So here's what I'm watching for. My eyes are actually over here. I'm going to put my eyes out here. Here's my eyes, and I'm actually looking and seeing what's going on the ZN. Okay? So I'm looking to the right and seeing, well, here, what's the ZN doing? What's the 30 or what's the 10-year Treasury doing? Because if I see the 30-year Treasury take off and head up, guess what I think is going to happen over here? It's going to take off too. And it's a really cool leading indicator for me on that trade. And if you are a boot camp student, I'll be happy to share those with you, Rick. Okay? I'll Skype with you tomorrow if you'd like. So I'm looking at the ZN to move and tell me which way it's going to go. So that is a secret that I use to tell me one of two secrets that tells me, hey, bonds are going to go up or bonds are going to go down. And I feel more comfortable when I get this confirmation. Hey, look, the 10 years moving. Okay, boom, now the 30 years going to move. And I love that relationship. If I see an inverse relationship, then I don't really want to be out there, okay? I want to see that correlation. Very, very important. Now, what's my stop? My stop is 4 ticks. Okay? I don't do, now, I'll get into one other nuance in just a moment, but I keep my stop at 4 ticks. I really don't. There are occasions where I will have it at 5. Very, very few. Now, if we have news coming out, this whole thing will shift to the 7:30 time. Does that make sense to everybody? If we do have news, then breakouts tend not to occur and wait until news hits. Okay? When it's a news day, then there's one simple thing all you need to do, and I'll keep this real easy. If it's news, it's going to be +5 -5. Does everyone know what I mean by that? If price is right here, 15 seconds prior to news, I'm going to put my order in +5 from where that is and -5. And I'm going to leave it right there. But here's the fun thing. you want to know what my strategy is set up at that point? My stop is going to be 4 ticks. My first target is 10. My second target is 30. How do you guys like that? So we're going to clean up on this bad boy because of news. I like the news days. Especially Fridays. 10 tick and 30 tick targets, 4 tick stop. That's where I'm at. And that's how I trade it. The ZN is not going to tell me much. This is purely what's going on with the with news moving stuff. Yes, some days are going to be whippy. Most of the time it's just bam. And you know what's funny? At which I have to laugh sometimes. Let's say my target is 10 on my first. Do you know a lot of times I'll get filled for 12 or even 15? It's kind of cool. Actually, it's really cool. So I want to see the correlation happen. So it's 5 ticks above, 5 ticks below before news. Employment news will get you that 20, 30 ticks most of the time. Again, nothing in trading is an absolute, but it's a great time to bracket it. And what I want you to do is I want you to go back and look at your charts and look back in time and see how things worked out just for the last couple of weeks or last couple of months. Keep looking at that. Let me back up to a couple days ago. That is news. Look at that. Holy cow. Do you like this or what? Here's 7:30 news, 7:30 a.m. Central Standard Time. Look at this. All the way from 150, 17, down to 149. Now, from here to here is 31 ticks. Add another 20. That thing moved 51 ticks. That's like oil moving 150 ticks in less than 20 seconds. Okay? On news days, I will use a market order. On news days. On the open days, I prefer to use a limit order. But news, unless you use a market order, you will not get in. You'll get skipped. Okay? So, I mean, and again, I'm just giving you the tip of the iceberg of what this trade's capable of and what I do on it. I've got some things coming up that I think might be pretty important for you guys. And let me walk you through it real quick, because I think it's going to be very powerful. And you know how I like to trade, because I pretty much just like, I want to show you what the nitty-gritty is. And today you've learned a lot about the advantages of trading bonds. Now, unfortunately, there's not enough time in a 1-hour session, what I just showed you, to get into all the nuances and all the little tricks of the trade that I like to do when I do trade bonds. So I want to invite you to join me for a 3-hour workshop this Friday from 11 a.m. to 2 p.m. Eastern Standard Time. I'll have time to go over it in a lot more detail on how I take advantage of this powerful trading vehicle. And I'll teach you 2 specific trades that work very well using the insights you'll get from order flow. And it's how to trade the 30-year Treasury bonds this Friday, June 12th, 11 a.m. to 2 p.m. Eastern Standard Time. And at the workshop, I'm going to teach you 2 specific setups. I used to make a killing on the 30-year bonds most every day. how to triple your profits versus trading oil. And I've talked to you about the leverage that we have trading bonds. And the best trade time to make as much as potentially $1,000 on one contract on a single trade. And how to keep your losses to an intelligent stops. I don't like big stops. I like small stops. And why the same trade setups you use for CL, TF, NQ, and the YM actually work better on bonds, which other markets act as leading indicators for ZB. How to predict when price is about to explode in either direction, and when to stay away from a trade and avoid getting whipped out. Yeah, there's times when you just don't want to trade bonds. There's times when you want to say, look, I'm going to back away. I don't want to touch this thing with a 10-foot pole. And you need to know when to recognize when that is, because I'll tell you through my learning of bonds and how to trade it, hey, let's not touch this thing. Let's just let's stay away from it. So, Bond Trader is a one-time training event. We'll record the event, and everyone who registers will get full access to the recording. We're going to turn this training into a course and plan on selling it for $597. But we're limiting this event to only 25 people so that we can make sure we have time to answer everyone's questions, because every time I go over a section, it's question and answer time. And if I got 200 or 300 people in the room, we could be there all day. And, we want to keep it to a small group. So if you sign up today, you'll get the live training and full access to the course created out of the recordings, along with some extra bonuses that we're working on and will announce on, actually this should be Friday. This is Friday. So if you would like, come join me. I'll give you the details here. It's just $297. Go to investtosuccess.com/bond. And we are going to get into it. We're going to roll up our sleeves, and we're going to have a great time. And we're going to start promptly at 11 a.m. Central Standard Time. And just 1 or 2 extra winning trades will easily pay for this event. And if you sign up now, I'll throw in my chart template and my time trade indicator, which will outline these trades for you and mark them on your chart, all automated for you. And this is how to trade the 30-year Treasury bonds this Friday, June 12th, from 11 a.m. to 2 p.m. Now, we're going to guess we're going to be done by 2 p.m. We may go later than that. All depends on how many questions we have and how that goes. And again, it's just $297. And I think that you know how I teach. I'm not going to waste your time with stories on stories. I get to the meat of what I do. I get very specific. And then we'll take probably 3 to 4 breaks within that time, 10-minute breaks. And that will also allow you to grab your thoughts as far as asking questions so you can digest what we're doing. And it'll be a lot of fun. So anyway, thanks for joining me today. I will stick around and ask a few questions and see if we can clarify anything for you guys. I will also be using a tool from Order Flow Analytics, which will help me determine which way I'm going to take the trades that I'm going to do. And that will be an additional $500 if you choose to get that indicator. One of the trades that I use will not need that at all. I do have a trading room that I trade every morning, 3 weeks out of the month. I have 1 month off. And we start at 8:50 a.m. Eastern Standard Time. My trading room only lasts for about 30 to 40 minutes, depending upon the trading day. So that's what I like to do. Can you explain which course is included in the price? Yeah. So basically, I'm going to be teaching a course on bonds, and it's $297 on how I trade bonds in the morning. The trading room, I will have someone get back to you, Clyde, if you'd like more information on that. The tools I use is not a recurring charge. I'm not a big fan of tools that cost you money every month. I'm not. I used to love Market Delta, but that thing cost me $250 every single month. So I prefer one-time costs for my tools. Data feeds are a little different. Thinkorswim may work for you. You can try it out, but that's something I don't use. I only have it written for Ninja Trader at this point. I have it also written for eSignal, and I'm also having it written for multi-charts at this time. So that's what I'm doing. Good to hear you. Good to see you, Chuck. I think you're the dentist from Florida, if I remember right. Will you be adding toss? No, I will not. Oh, you're not. Okay, all right. Thinkorswim is fantastic for trading options. When it comes to day trading, I don't use it personally. But again, that's your choice, what you want to do. Okay, well, I'm not seeing any more questions, so I think hopefully I've done a good job answering them for you. Hope to see you this Friday at 11 a.m. Eastern Standard Time. Go to investtosuccess.com/bond. The options on futures, which are liquid and premium rich. Which are the options on futures, which are, I don't know what you're looking for. Are you looking about options on futures? What broker do I use? Oh, I have a whole 45-minute presentation on brokers that you've got to watch before you pick a broker. For this trade, I actually use global futures. Make sure you tell them that I sent you. They'll give you our preferred pricing. Talk to Greg or Vinny. But yeah, globalfutures.com. Talk to Vinny. Talk to Greg. They'll help you out. And yes, we are recording the event, so you'll be able to review it. Absolutely, because you want to go through it 2 or 3 times. And we will be sending out a notification. Yep. Very good, ladies and gentlemen. Thank you for joining me today. I appreciate you guys taking the time to come out. Hopefully you've learned something that's pretty cool that you'll be able to try tomorrow or actually test it out first. Go back and look at your charts. And then from there, go ahead and get some experience with it. So with that, I will see you guys next time. Take care. God bless, and have a great day.